This is Optimal Finance Daily, episode 1818. Personal Capital, the financial tool you need, and the plastic card, credit card debt. Both by Philip Dancy of dancywithmoney.com. And I'm your host and personal finance enthusiast, Diana Merriam. And now let's get right to it and continue optimizing your life. Personal Capital, the financial tool you need, by Philip Dancy of dancywithmoney.com. Nike Run Club, Time Free, Asana, Google Drive, Venmo. The one thing these mobile apps all have in common is they help us better our lives in one way or another. From helping you keep track of your exercise, to keeping your to-do list organized, to paying your friends for your share of drinks during a long weekend. We all have these apps for other areas of our life. Why not have one for our personal finances, right? Of course. Although there are several apps to help you with your personal finances, the one that has the Dancy with Money stamp of approval is Personal Capital. Exactly what is Personal Capital? I'm glad you asked. Think of Personal Capital as the app that gives you a 360-degree view of your money at the palm of your hands. It's an aggregation tool that allows you to connect your financial accounts, such as checking, savings, investments, loans, and credit accounts, to give you a full and complete picture. Instead of having to log into each and every one of your accounts during your financial check-in, you can just log into one app to see everything all at once. Did I mention this financial tool is free? And if you aren't convinced of the benefit of having all of your finances in one place for free, here are 3 advantages to downloading this app. You can see the big picture. One of the key things I love about this tool is that it shows you your net worth. Net worth can be calculated by taking your assets, such as cash, investments, and subtracting your liabilities, such as credit card debt or your mortgage. I personally believe having the full picture of your finances can help you make the necessary steps during your journey to financial freedom. It has useful and visual charts. The budgeting and cash flow charts show you exactly where you're spending your money and keeps you on track from a budgeting perspective. These charts can point you to areas where you can improve your financial health. This could include cutting back on eating out and reallocating that money to one of your financial goals. It's an accountability partner in your pocket. If you've been on this journey with us for a while, you've noticed that Dancing with Money's slogan is holding you accountable. This is the perfect application if you're looking for another accountability partner. Personal Capital sends weekly updates about your spending habits, as well as how your investments are performing to help you stay on track with meeting financial goals. If you're not completely sold on Personal Capital yet, or you just don't like the feel and look of it, there are other apps such as Mint and Clarity Money that could help on your journey as well. Whether it's today or sometime this weekend, I encourage you to take a few minutes to download an app that will help with your personal finances. The Plastic Card, Credit Card Debt, by Philip Dancy of dancywithmoney.com. $6,829. That's the average U.S. household credit card debt balance according to NerdWallet's annual analysis of U.S. household debt. The plastic card has its perks, such as cashback, points towards flights, or even first pick at Beyoncé tickets. But this plastic card could easily get us in trouble if we start using it like it's our own money. If we're being honest, we've all looked at our credit card bill and asked ourselves, I spent what on that? There are also scenarios where the unexpected happens. If we don't have the savings to cover it, we place it on the card, anticipating to pay it off the following month. But in a lot of cases, we end up just paying the minimum balance due to other financial obligations. In either scenario, It doesn't help that the national annual percentage rate, or APR, is around 18%. Think of APR as the full amount you'll pay for a loan over the course of 1 year. It includes any fees you may need to pay, plus the interest rate a lender applies to your particular loan. As such, APR has a huge impact on the actual amount that you owe on the credit card balance. If one only pays the minimum balance on the credit card, that purchase will end up costing a lot more than the original price paid just because of interest. Consequently, we end up in the cycle of debt due to compounding interest, which isn't helped by the continuous use of the credit card. Just to put this into perspective, I have an example for you. Let's say an individual owes $1,000 on their credit card, 18% APR, and only makes the minimum payment of $25 per month. According to Credit Karma's debt repayment calculator, the individual would end up paying $539 in interest and take 62 months to pay this off. Eye-opening, right? This is one of the many reasons individuals get caught up in the never-ending debt cycle. Although it may seem a little scary, there are several things that we can all try to implement to proactively avoid the downfalls of credit card use. Pay more than the minimum if you can. This will ultimately cut down on the amount of interest you owe and the time it takes you to pay off the credit card. Think twice before swiping your credit card aimlessly. Practicing this will help you avoid using your credit card for impulse purchases. Create an emergency fund for those unexpected expenses, such as tire replacement or a medical bill. Having money set aside could save us hundreds of dollars of interest by having the ability to pay cash instead of borrowing. You just listened to the post titled Personal Capital, the Financial Tool You Need, and The Plastic Card, Credit Card Debt, both by Philip Dancy of dancywithmoney.com. I'm also a big fan of personal capital, but I only use it to track my net worth. I don't use it to monitor my spending because I found that when you have multiple accounts with one provider, sometimes it doesn't pull them in correctly. So for example, I have about 5 credit cards with Chase under one login, and I noticed Personal Capital wasn't pulling in all of them or was pulling certain ones in twice. Since I pay my credit cards in full every month, I decided to just remove them from Personal Capital, and I use other apps and methods to track my spending. I think it's a good idea to look at your net worth periodically, but remember that this number will fluctuate, and that's okay. Your assets are going to include your investment portfolio, which is going to fluctuate with the volatility of the stock market. So if you see your net worth decrease due to your investments, don't freak out. Remember that the stock market is a roller coaster, and this should be expected. You didn't lose money if you didn't sell. These are unrealized losses, just like your gains are unrealized gains, and this is largely outside of your control. However, if your net worth decreases due to you taking on more debt, that is absolutely within your control and should be monitored closely. When it comes to credit card debt, if you've been listening to this show for a while, you already know that it should be avoided. I'm a huge fan of credit cards as long as I'm not paying interest, and the only way to avoid that is to pay the balance in full each month. If you can use credit cards responsibly and you aren't at risk for overspending, they're an incredible way to earn rewards points for free flights and hotels. I personally do a lot of credit card churning, where I get a new card every few months for the sign-up bonus. I don't spend enough day to day to earn enough points to make credit cards worth it. So the key for me is to churn cards for the sign-up bonuses. And that should do it for today. Have a happy rest of your day, and I'll see you on the Thursday show tomorrow, where your optimal life awaits.